Hi, my name is Steve Nomura. Today I'm going to talk about how you make wealth or profit in real estate investment business. There are four major ways to make profit or wealth in this business. Those are cash flow, capital gains, equity building, and tax savings. I'm going to talk about one by one briefly. Okay, first one is cash flow. Cash flow means this is a balance between your rental income, how much you're receiving from your rental properties. Major income is rent. Maybe you can charge some garage fee or pet fee or laundry machine or some other fees you can collect from your tenant. And the balance between those rental income minus your expenses. Maybe you have to pay the loan, you have to pay some maintenance, you have to pay some utility bills, and maybe you have to pay some tax by yourself. And those are expenses on your rental property. If you have some positive balance between your rental income and expenses, that is your positive cash flow. If you are paying more than your rental income, this is a negative cash flow. Okay, we are talking about positive cash flow in this case. And if you have so many rental properties, and if you have enough positive cash flow more than your life expenses, at that time you can say you're financially free. Okay, first one, cash flow. Okay, second one is capital gains. This is very easy to understand. If you buy some property and then you're gonna put some money and fix it, then you're gonna sell later for the profit. That is your capital gain. Of course, you can buy property and fix up and rent out for one year, 2 years, 3 years, and then you sold it. Also, you can get capital gain too. Okay, you buy property and sell for the profit. The balance of those purchase price and the expenses for your rehab or repair, and then sales price, that is your capital gain. Okay, let's talk about equity building by appreciation first. Appreciation is the growth or increase of the value in a particular property. You can take some actions to increase the value, increase the appreciation. Let's say you updated entire house. Okay, you updated the kitchen, you updated the bathroom, you put the new carpet, you installed a new hardwood floor, you replace the entire roof, or you build the new car garage in the backyard. Those are important activities to increase the value, increase the appreciation. And we have a natural appreciation, like inflation in the society, together with the inflation of the economy of growth. We have a natural appreciation. Okay? Together with the natural appreciation, if you take some actions, you have more appreciation in the property. If you have more appreciation, you have more value in the property. That's one way to build your equity. The second thing is equity building by loan amortization or principal deduction. If you use other people's money, if you use leverage, means you use other people's money, private lenders or bank money, whatever. You use other people's money to get more returns. That's great. And every month, every year, you are paying them, means you are paying your principal together with the interest. Every time you pay the principal, that is increasing your equity in the property. Okay, let's say you purchase $100,000, a property for $100,000. You use $90,000 from the bank. You have a $10,000 equity. But every year you pay $10,000 principal down, means you're making $10,000 equity every year. In this way, you can build the equity by paying principal every year. The last one is tax savings due to the depreciation. Depreciation means your value is depreciating. In the residential properties, 27.5 years, your value becomes zero. If you keep the property nicely, of course, your value is going to be same or increasing because of the appreciation. But government allow you to tax write off according to this depreciation over 27.5 years. Let's say you purchase one property for $275,000. $275,000 divided by 27.5 years. It means every year you can take $10,000 tax write-off on this rental income. Okay, if you make $10,000 rental income, you don't need to pay any tax. Even you're making $10,000, actually you don't need to pay any tax. Okay, if you make only $8,000, okay, you don't need to pay any tax. You can use this $2,000 extra tax write-off for something else in your rental business. Okay? In this way, you can take such a big tax benefit on the rental property due to this depreciation. Okay, these 1, 2, 3, 4, cash flow, capital gains, equity build-up, and then tax saving. This is the 4 major ways to build a wealth in real estate investment business. Therefore, we have a rental business, we have a flipping business. In both ways, you can make money, but to maximize the benefit in rental real estate investment business, in the long term, you have to have a rental property to maximize your profit, maximize the benefit in this business. If you have any questions or if you are interested in getting more information, please leave your comment below. Thank you.